Hello everybody, this is Greg Mikulowski and this is a Forex commentary specifically for FX Street, looking at the sterling versus US dollar. If you look at this currency pair, we've had a pretty strong rally here. This is in the face of a hung parliament, which is going to take place next week or so. That is the expectations. And sometimes when the market's fundamentals are pointed toward a lower currency pair, what you often get is a short covering squeeze as the market is already short and it's forced to cover its position, especially as it goes through some key levels. Some of those key levels that I want to point out, actually I'm going to put in a Fibonacci here. If I take my tool down here and bring it from the high and drag it to the low, you have the high for the week, the low for the week, and one of the levels that we did go through here today was a 38.2% retracement. That occurred at the 152.67. Those people would think that the bias and the trend is going to continue to the downside often try to cover or use the 38.2% retracement as a level that they would cover their shorts. So that was one push to the upside. You can see here once the market tried to get above here, failed. The next time it went through that level at this bar right here, we then started to get a little bit more momentum, to the upside. The next level of resistance that the market squeezed above was the 153.11 area. That's a 50% retracement of this move from this high to this low. So further squeeze sent that price up through the 100-hour moving average, which is our third level, and that came at the 153.18. And the fourth level was the final level, really, became, for today at least so far, is the 200-hour moving average, and that came in at 153.40. So the market had this progressive step through the last 3 or 4 hours, through 38.2, through 50, through the 100, now up to the 400-hour moving average, and the market has since come off. As you can see here, the current price is trading right there at around the 153.19 level, and that's right here on support, right here on the 100-hour moving average. So we're at a key level for the sterling versus US dollar. If the market should get through this level and then get through the 11 level, we could see pretty substantial or pretty good move to the downside for this currency pair. I'm going to take another Fibonacci. I'm going to put it up from the lows to the highs here from today's trading range, or actually from yesterday's to today. Today's low, and the 38.2% would bring the price all the way back down to the 152.58 level. That's just above the 67 level. So you can see that that we probably have additional resistance or support bringing that could take the market all the way down to the 152.58 to 67 level. That would be the target on the downside. If this level can break, if the 50% retracement level again of this move can break, that might put added pressure on the sterling versus US dollar. How do you know you're wrong? If on a break of 11, if it goes back above the 100-hour moving average, it's as simple as that. Traders who trade successfully trade around the borders. They trade around the specific areas, and if the market doesn't hold their level, if it doesn't hold the 40 level, they get out and they take a small profit or a small loss. If they're right, they're able to ride the trend and look for those corrective moves, look for those trends to the upside, and ride it into the sunset. This is Greg Mikulowski with a look at the sterling versus US dollar for FX Street.